The Money Show. Personal finance.
Warren Ingram from Galileo Capital. What investors can learn from the Steinhoff and EOH share price collapses. Let's park Steinhoff for a second, because I think they fundamentally, do we agree that they're fundamentally different issues?
Two completely different issues, yeah.
Okay, let's do EOH briefly. I think it's probably a quicker one to tackle.
Well, I think they're interesting because they're so by contrast. I think between the two, that's really what we can learn. But if we look at EOH as a start, we see the share price sort of trickling down for quite a while since the founding CEO resigns, Asher, and then all of a sudden we see one or two press reports about potential dodginess, potential corruption, and the share price decline accelerates a little bit, and then all of a sudden it goes into absolute free fall last week
without explanation.
Well, yeah, I think to me the without explanation part, it still felt to me, without really knowing what we know now, that it was more about this taint of corruption around one or two smaller divisions in the business. It didn't feel, if you read what was going on, it didn't feel to me like it was a taint of corruption on the whole business that was endemic to the way that EOH had operated for many years. It felt like it was a reasonably isolated thing. The problem was that management just weren't talking at all to the market, not telling anybody anything. And as we know, nature abhors a vacuum, so we fill it with as much bad news as we possibly can, because that's what we do as people. And so the share price just goes into free fall. And I do think it was somehow linked to the Steinhoff, because I think investors at the point now where we are, we've got a week to go till the anti-elective conference.
No, it's 2 days.
Well, yeah. I guess until the 20th. I guess when we hear the news, that we're all waiting for, and so people are looking for any reason to get out of anything that could possibly be at risk, and so its share price collapses, and to me, that's it didn't feel like an issue that was threatening the long-term survival of the business. It wasn't as if suddenly they couldn't repay their debtors, or that they were struggling with cash flow. Those are issues that might come in the future, but they weren't issues that we were seeing there, and we certainly didn't see anything around fraud or problems with their balance sheet, like we're seeing with Steinhoff.
But we did see then finally an announcement come out of EOH to say, terribly sorry, there was forced selling of the share because of 2 positions that directors had taken out. And we had the EOH chief executive on the show last night, and we had Simon Brown from Just One Lap being very clear and saying if directors in my company took out positions on the share in the way that the finance director and another director in the company had done, he'd fire them. I thought the chief executive of EOH was about to fall off his chair. But the reasons for EOH's share price collapse in last week weren't for any fundamental reason other than a technical reason on forced selling. And it doesn't mean that the share price is not going to recover. And that's the difference, I suppose, between EOH and Steinhoff.
Well, and I think that's so the contrast is just so interesting, because, I mean, my phone just went off the hook about both. And people saying, should we buy Steinhoff? It's such a huge business, and look at the share price. I think at the time my phone started ringing, it was at about 17 Rand a share. And
on the way down, or was it on the way up at that point? Sorry,
no, it hasn't come back. So it's on the way down. Yeah. And so my initial sense, my immediate sense was, you cannot buy the share with any form of certainty, because they owe a lot of banks a lot of money. And the problem now is if your financials are a fraud, let's just say, we don't know that for a fact yet, but let's just say that that's the bottom line, and they've been lying to their creditors, and then all of a sudden the whole game changes, because it might I'm not saying it's a house of cards, but it might come down like a house of cards, and suddenly the actual future of the business might be at threat. You might find that it's broken up into constituent parts and sold at absolutely ridiculous values, and shareholders just get no reward. And it felt to me a heck of a lot like two businesses from the past. One, African Bank, where we see shareholders just got demolished.
Yep.
And that was a debt problem. That was, the business literally just couldn't pay the bills at a point in time.
And we know Steinhoff has a debt problem. We just don't know how deep and dark and difficult that is.
Yeah, and unfortunately, when companies start trickling information out like they are now, and it's really similar to African Bank, the problem is actually a lot bigger than initially is feared. And the biggest example to me would have been Enron, where we had this major energy company, a huge darling of the market in the States, and it literally went to zero. It just absolutely collapsed because there was massive accounting fraud and huge, I just want to say collusion between the business and its auditors and its consultants, et cetera, and if we're in that situation now, then I just couldn't see myself buying a share with that huge debt problem.
A Sunday Times columnist I know quite well has penned some thoughts on this particular subject as to what it is about human psyche that says, why do we say, oh, the Ruperts have made lots of money. You know what? We should buy Remgro. Oh, those Oppenheimers were terribly clever. We should, in the days when you could buy De Beers, we should buy De Beers because the Oppenheimers have made so much money for themselves, they'll continue to do so. That Christopher Visa, what a clever chap. He started Pep store. He grew Pep stores from almost nothing, grew ShopRite from almost nothing with White Besson. He's got the Midas touch. And as people who buy shares, you've got to say, hold on a second, what is it about you and FOMO that makes you make irrational decisions? Because many of the decisions that you do make following blindly, I'm not saying that any of these people have made, and not all of these people have made bad decisions. Very few have made bad decisions. That's why they're super rich. But making blind decisions based on the fact that people have done well in the past is not a strategy. It's not how you should be positioning your investments.
Yeah, I agree 100%. I mean, I think, often we follow these titans of business and we see them go from, Act 1 to Act 2 and we expect, that they were incredibly successful as a, food retailer. So suddenly they're going to be incredibly successful as a cosmetics retailer, or they're going to be suddenly great in financial services or something. And I think that sort of blind faith in, that the sort of almost cult worship of a business leader is fine when they're in their field, and they know what they're doing. I can understand it to an extent. But when you got a clothing retailer suddenly going into, property businesses and furniture, et cetera, why would they have that level of expertise? So I agree with that. But I also think we need to acknowledge that family controlled or family run businesses worldwide, they do have a history. The good ones have a history of delivering real long-term value for their own families and therefore for their fellow shareholders over decades. And I think that there's an important dynamic there. I really like family-run businesses because I think that they don't think about the next 3 months only. They're thinking about the next decade. And strong business leaders who can think decades ahead, despite what analysts are pushing them to do next week, so that their unit trust results just happen to look good for the end of the quarter, et cetera. I think that those are the businesses that can deliver real value. And it's to me no accident that someone like Asher comes back into EOH because he owns a serious part of that business. A huge proportion of his long-term wealth is stuck in that company. So if he's coming back in, he's doing it to look after himself, but that means the shareholders that have been along for the ride for decades are going to recover with him if that is the case, if that's what they do.
Yeah, so Warren Ingram, bottom line, two very different companies, two big collapses, one calamitous and one being able to read the signs and realize that it's not the end of the world. And that, of course, being EOH as it does recover. It's had a stellar recovery yesterday and today, still far away from its record highs of a year or 2 or 3 ago. But there is a bounce, and it's not a dead cat.
Yeah, and I think that it's not a punt. It's not a sort of a shameless punt to say, listen, go and buy it because I own it, which I do. But unfortunately, I own it at 130 rand. So I'm not enjoying this.
You're small in. This is not even a small in down skeleton. This is.
So I should say that
lie down on the couch and put a cool cloth on your forehead. You bought Steinhoff shares at 130 rand.
And at 40 and at 58, so I've been buying it down, but the point is the logic of looking at these things and saying, yes, there's, you need to be opportunistic sometimes as a investor in shares, because that's what Warren Buffett always says is, be greedy when others are fearful. So I think it's a fantastic urge to have, but then do your homework, understand why the share price of whatever the company is falling, and then make sure that business can be around and will be around at least for the next 12 or 24 months.
And you could have anticipated that with Steinhoff if you assumed that management was honest. And right now the market is assuming a high level of dishonesty on behalf of management of Steinhoff.
I mean, absolutely, and it's always amazing to find the people that are now incredibly clever after the fact, and how obvious this always was to everybody, and how stupid the fund managers were, and I think the same happened with African Bank, and I'm always skeptical of those clever talking heads after the fact as well, because very often my question is, why were they not this verbal before the time? Why were they not warning us, this loudly before the time? It's because it's actually very difficult. If management are just blatantly dishonest, then they're dishonest to everybody. And so if they're cooking the books, it's actually quite hard to figure it all out.
Warren Ingram from Galileo Capital, some critical warnings, some critical lessons from one big failure and one shorter term disaster. Well, certainly we hope it's a short-term disaster. The recovery today, quite nicely, incidentally, of EOH, which ended today up 17% at 64.48 after hitting lows below $50 just 2